Hello, my name is Thor Young with Bear Bull Traders, and I would like to do a recap for you today on my goose trade. As I was in chat today talking with a couple of the guys, we were talking about descending wedge trades, and you've seen that covered quite a few times in some of our advanced classes that you've seen some of our moderators put out, as well as in some of our individual trades. I was asked what my favorite type of trade is, and a wedge breakout trade, if you will, with a couple of exceptions, is one of my favorites. So on Goose here, was gapping down quite a bit on some news today. So I was already looking at Goose just because of that momentum. As I was looking at Goose up here around 10:45, I actually didn't sit down till right around this time, so I started looking at it and I was watching it. I saw this nice double bottom it was making. Now, when I was looking at this, it was very overextended, so I'm thinking to myself, you know what? It's coming back up through the averages. Maybe this is, in fact, a double bottom. So I originally took a long position on Goose and got quickly stopped out for a small loss. Now, I was fortunate. The way this double bottom was working, I was looking for a breakout here, so that's why I got in there and then got stopped out. But I took a really small share size because I knew that this, in fact, might not be a double bottom. It could be a descending wedge. Now, once I saw one particular thing happened, I knew it was a descending wedge, and I instantly knew I needed to flip my position. So I had some small shares here, and then you see this wick up that happened here. So what you have here on a descending wedge is you have a very clean base down to 3681. So, and then you see the moving averages are coming in here, and the wedge is honoring all of these moving averages. So it's continuing to push closer and closer to the base. Ideally, my entry would be for going short on this, would have been where one of my prior entries for going long was, which was around 3690. And then the break of the 9 moving average, let's just call it, we would have called it 3701 because of that. So you could have looked at a 10-cent risk. You easily could have taken 500 shares here with very little risk. So now I didn't do that. I went long on this, so I actually got stopped out. So I made the wrong call here. But what this wick told me, which I would lovingly refer to as a shakeout, told me is that the pressure was in the opposite direction, and this was actually a descending wedge, not a double bottom. So after it broke through and confirmed, I stopped out, and then I waited to see what was going to happen. Over the next couple of minutes, the story came true. Goose pulled back up to my 3680 level at my base here, and I recognized with some pricing action and other things that this was definitely going to go short. So I went ahead and took a position here at 3677. Now, what's interesting is because of this position, and my stop loss would now only be 4 cents instead of my opposite, which was 10 cents. I now have a much tighter risk reward. So instead of 500 shares, I took 1,000. So with 1,000 here on the short side, I quickly got rewarded with a pop down to 3660. Went ahead and took off a share there for an already solid 3-to-1 move there, and then continued to take partials down. Now let's see how much fun we had. So my entry was here at 3680 to go short, and you see I got partialed here. We'll call it every 20 to 30 cents I was grabbing partials. Anytime it lost momentum, and that's how I generically like to partial. I like to partial as the stock loses momentum. That tends to be when I like to try and get out. And I actually managed to get partialed all the way down to 35.85. By this point, I was down to probably about 10%. That's quite a lot of partialing, so I was quite out of shares. And I was even saying in the room, my next partial has to be a full out because there's nothing left. And then I actually saw we started to make a pretty solid bottom here, pushed back up through the averages, pushed through a solid level here. So I decided to go ahead and get out for the remainder of my shares at 36.25 because it looks like we're trending a reversal now. So this was my goose trade, and this is why. It's important to keep your risk small. If you're not really confident in your trade, like you think, this could be a bottom reversal, but I'm not entirely sure, don't load up. I only took a smaller share size, so I only lost $20 or $30 on this trade. However, because I was able to go larger here with a small risk reward, and I got such a large move, at one point, you're talking almost a full dollar on a $30 stock. So this reward on this was very, very good. So I was able to easily close my losses. And look, now I also got out of Goose because it made this move above the averages, pulled out here, so I decided to go ahead and get out at 36.25 for the last. And after making that decision, look what Goose has done. It's ripped all the way back up to 36.50. This looks like it's on a hard trend, at least to pull back to the 9 on the 5, which would have stopped me out. So no need to stay in a trade. Watch the trend. These same trending techniques that get you into the trade can also help give you levels to help you know when it's time to get out. Anyway, hope everyone enjoyed my trade here on Goose. Hope everyone's staying green, and I hope you have a great day.